Hi traders and welcome to the Technical Analysis Market Wrap on Friday the 10th of December. So we saw some good moves again this week. Last Friday was the catalyst for a couple of the big moves on the Aussie USD and also a rebound on the Euro, and we saw that continue on early this week. So we'll jump straight into the charts and we'll see what we can find for today's trading and early into next week. So I'll start out here with the Aussie USD, and you can see that last week's trading pushed it all the way down to the 70 cent zone that we actually really wanted. That was our main target, and hit it pretty much to the pip, so that was really good. What we saw then, of course, was a bit of a reversal. Now, look, 70 cents is always going to be a very, very tough zone for it to break on the first go, so we've got to go out a long way to actually see that, of course, and you can see right through there that it was resistance and resistance support right through here. Like, we're going back many months and a few years actually, so you can see it's an extraordinarily important zone. And if you go back further, you'll see even more data on it, so no surprises that it did exactly what it did. Once it did touch it, you can see that we had a really good rebound off it. But I think what actually did transpire was the play out to the first real resistance actually went perfectly. You can see here that we had a really good move up. The 20 moving average on the daily pulled it up, and that's also a very important reversal zone. You can see that it was actually really good support here. Basically touched it to the T, and you can see the 20 was holding it up. So if you were going to take profit, that was the place you were going to take it, no question. You can see very clearly that you had two very major stumbling blocks for it to go longer. And I think the clues on the smaller time frame are even better, because once you actually saw that this trend was actually continuing, you can see that you had a couple of entry points on the 20 moving average up into that zone. Even around these levels here, you're still able to actually get in because you had enough pips to actually make a decent move. Now, the double top that formed at that resistance point is ideal, obviously. So whenever you get a pattern like this in the direction of the prevailing trend, which is of course is the daily, and also at a very important place of resistance, it's always going to work out better for you. So you can see here pretty much a perfect double top. Big shooting star on the second peak, which is very ideal, obviously. Then it breaks through the neckline and has already completed. You can see it landed on the 50 moving average, and now it's actually being strangled by the 20 moving average and the 50 moving average as well. So in a perfect world, if you missed that entry, you would have been able to take the rebound off the neckline if it came back and tested it. But the 20 moving average has been so strong that it's actually held it from actually even doing that. So it hasn't been able to reach that neckline again. So really good trading on the Aussie. I think if you were able to get some of that move, that was great. But I think just as equally, when it did reach this level here, you had all the technical reasons to actually sell it from this point, or at least close your longs, and that played out really nicely. So if you were actually watching the Aussie and that was the only thing you were trading for the week, you had about 3 trades, which I think is pretty good. All right, we'll move over to the US dollar CAD now. Similar story in reverse, of course. It's had a very big move up, very long and sustained. There was quite a bit of selling pressure at this level. We've been trying to break this level for the whole year and has failed to do so. So it's certainly no surprise to actually see it fail at the 128. So no worries there. But you can see here that it did land on the 50 moving average. And also, if you do put your horizontal line here, you can see that we've got very strong resistance and support at this level. You'll see the levels right through here. All of that resistance when they had that channel that we were trading in at around March this year. And then you can see right through here, there was a lot of support at this level as well. So now there was no surprise to see this bounce and rebound off this level here. Really good place to actually go long. You can see that it's already rejected and it's already started its journey. You've got to go to the smaller time frames to probably get in it now. And look, you can't just jump in because it is a level, of course. You've got to wait for the change of trends, and they were happening. But look, what we're seeing now is a very big hugging of the... You can see here we're just about to break past the moving averages on the 4 hour, which is really important. The 1 hour is where the trading's at for this one, though, if you want to jump in and get on board, because realistically, we've got the 2050 cross now, and it is hugging the 20 moving average, and it's holding up very steadily. So what we want to see now, if you're not in it already, we want to see a pullback, of course, of the 20 moving average, and then try and get the longs off that. And I think that we've got up to the previous highs is probably a pretty comfortable level for it. You have to go out here. So, I mean, these levels are the ones we're talking about. So it's sitting at around the 127.20 at the moment, but you would think that 128.50 would be the very first target. It may be the one that breaks. Look, eventually, all resistance and support eventually gets broken down, so it's not like it's going to hold forever. But a retest this soon compared to... So you can see here, these on the daily chart, these tests were several weeks apart. where if this one gets up here fairly quickly, you're going to be able to see a very hard attack on this level. So realistically, if it gets up there quickly, there is a chance that it will break it. But of course, we're going to be governed by the swing. So what we want to do is see the real momentum lift in the 1 hour and the 4 hour charts, make sure that the momentum is really pushing it. And we'd like to hit this with a little bit of pressure. And that may be the one that breaks it and takes us back into the 130 levels, which would be ideal for the CAD. A lot of good judges say that 130 is on the cards. Let's hope so. I'd like to see the 120 break, because I think that would tell a really good story of the technicals for the latter part of the year for the CAD, and I think it's given everybody a lot of good trading. And this was just a pullback, really, that played out very, very nicely. All right, we'll move over to the US dollar yen now. Now, the US dollar yen, hasn't been as good as the other majors in terms of movement. It's been a little bit more restrictive. You can see here, though, it is stuck still in the middle of this channel that we were talking about last week. We've got, two pricing channels that we're very comfortable. It's going to trade in between. We're not going to do anything serious on this pair, of course, until it breaks either the 114.20 or the 112. Until it gets a daily close below or above either of those levels, we're not going to get excited about this one. So there is a little bit of trading. If you want to scalp, it's purely scalping only. You got to go to the smaller time frames and see if you can identify a change of trend. But look, to me, I look at that and see a mess, really. I don't really like what I see. I don't see an orderly pattern going down or up. So I would probably sit this one out until it actually does one of the key level breaks that we need it to do before we start to get excited. Now, if it does get to the top here, or gets to the bottom here indeed, and does have a change of trend on a smaller time frame to the upside, then it's a bit different, because then all of a sudden we've got a good range to actually trade into. If it fails to break either side, but it reverses on a smaller time frame and starts to give us some lightning bolts on either side, then we've got a good range to actually trade into. So it's very, very be mindful that you want to be making sure that you have got a good range to actually trade if you do get in a trade. So if we get in a long here, we know there's pressure straight away. And if we get in a short, well, although there is a bit of movement down, by the time you actually get the signal to go short, which is going to be a lightning bolt, you may only have 10 or 15 pips. So that's very, very light trading. So you want to be careful and make sure that you haven't got too much trouble in front of you when you actually place a trade. All right, we'll move on now to the dollar index. The all-important dollar index has found support where we needed to find support. We had a week of confusion last week where, well, not confusion, probably more indecision than anything else. You can see that we were very, very wicky, had very, very small bodies. This week has continued. You can see that the last 3 or 4 days have been pretty ordinary. We had a bit of a sell-off down to the 20 moving average, but it's quickly rebounded in last night's trading. So, look, for me, this is still holding at the 20, which is really, really important. We know that's a very, very important zone for it. It's been important for a very long time. And while it's doing that, we know that we're not going to be looking for any significant moves, obviously, especially on the euro and some of the majors. So if we see this revitalized strength, we're going to see a bit more of a sell-off in the Aussie USD, of course. The US dollar CAD could definitely strengthen. That's going to be a beneficiary of this, and the yen may pick up to that level as well. So realistically, what we want to do now is just see if we can break these highs and start pushing to the 96.80 again. That's the level that we're targeting on the upside. I wouldn't change my mind unless we get a daily close below the 20 moving average, and it has to be a close on a daily. Nothing short of that will convince me that this is going short. And I think it's very important to be, very, very mindful that when you are looking at a big time frame like the daily on this, that it requires that particular candle time frame to actually break the zone before you get excited. Don't go to a 15-minute chart, see a break of this level and say, all right, we're on. I mean, eventually it will come on. I mean, look, all small trends turn into big ones eventually, but you're going to get a lot of fake breakouts, or you're going to get a lot of false signals in that regard. So always stick to the bigger time frames to actually make your major plan. And you can't go too far wrong then, because you've got the consensus of what is a lot of heavy trading. A whole, when you see a daily candle, you've got to remember that that's 3 or 4 world markets making a decision for that particular day as to which way it's going. So you're giving everybody a chance right around the world to have their say as to where it's going for that particular day, as opposed to a 15-minute chart, of course. That's depending on what's going on in that 15 minutes. So obviously very, very obvious to say that, but a lot of people get that wrong. So just be very, very careful when you're looking at breaks of key levels to make sure that they're on a significant time frame that actually justifies the break. and this is no different. So you can see if we get a break above this level here and we start to trend higher, then we're looking at retesting the recent highs again, and I think that's going to bode well for the next one, which is obviously the Euro USD. This has been a little bit weaker than the Aussie in the sense of movement. You can see that we had sustained weakness for a little bit, and then we've been a little bit of pushing up over the last few days, but it is being well and truly trapped by the 20 moving average. The fact that it wasn't able to make a new high here doesn't really bode well for it. It's no surprise because obviously the dollar index is telling us that, but realistically, if this was going to give us the strength that we needed to convince us that the 112 level was going to hold up and push higher, then it should have actually made a new high here. It had the chance to actually get up, test the 20, pull back and break it. It didn't do that, so that does worry me a lot for the long on the euro. What we need to see, and look, it can turn around. It wouldn't be a big deal for this to make a daily close above these moving averages, but I certainly wouldn't be touching it until it did. Okay, I wouldn't be preempting that. The 20 has been very, very strong on this one, and no surprises here that it's actually pulled it up again. So if we get a daily swing past this level and a significant close, and we get that lightning bolt that we're looking for, the bullish lightning bolt, that will be good. Then we can start targeting the 114 and 115 areas on it again for some scalp or some swing trading. But it needs to do that in order to be a convincing trade. The idea really here is that it's probably going to be looking for the 112 again. So I know that's only 90 pips away. So I'd be scalping down to that level if we get that signal as well. So there's two ways to trade it. I mean, you can go either way on it, but I think you need to wait for the signals. The short's more likely because it's actually found that on the daily, it's actually found the resistance very, very quickly, and it's found it at the previous high. So it doesn't bode very well for the strength because it found trouble straight in front of it. And now we will be looking for the easier trade, which is obviously the short back down to the 112. But of course, we need a lightning bolt effect on probably a 1 hour chart in order to do that. And we should still be able to find 40 or 50 pips on that short. Failing that, of course, if we get a daily close above the 20, then we can start targeting the bigger picture long. But then we've got momentum on our side. The important thing there is we've got a momentum swing that has been sustained and actually proven to break a key level and get past this zone. So that's really, really important. Both sides are good, but the short is just a little bit easier, and that may well happen a little bit quicker. Okay, so let's move on to the Aussie 200. Now, the Aussie 200's found itself in this zone again. It's had a big week, no question about that. Very similar to what the S&P has done. So, is it a Christmas rush early, or is it the Santa rally that we all talk about every year? I'm not so sure that the market action has been that convincing this December that we're going to see the rally that everybody thinks we're going to get. We might, but in order to do that, it needs to break this 74.80 level. If it doesn't break that level before Christmas, then in my mind, that's not really a Santa rally. That's just getting back into a price channel. Now, if we see a break of this zone prior to Christmas, so if we see that in the next week and a bit, and then we've got a week until Christmas and it's above this zone, then I think that speaks a lot more highly of a potential rally that we can actually get involved in. But if this gets back only to the 74.80 or it's hovering inside this zone, that to me is just normal trading. That's not any rally of any significance, so I wouldn't be getting excited about that. So just be very mindful of that don't get too caught up in the sayings and all of the fancy stuff that happens on seasonals until it's actually doing it. Seasons certainly play out, don't worry about that, but you want to see them actually prove themselves first. Don't just assume that it's going to happen. It needs to actually do something to actually validate why it may actually do it. And for that, we need to get 100 points up from here and get above the 74.80 with at least a week to go. Otherwise, that's just normal market movement and it's hovering inside a channel. Okay, so just keep an eye on that one. But the MACD is looking very strong for it. Look, there are signs that it could definitely push up, and I would be very, very interested in this if we're trading above this level early next week. That's a different story, and then we can definitely start looking for the pressure to push it all the way up to the recent highs and maybe to an all-time high, which is what a lot of people are calling for. But we'll see. We'll let that one play out. All right, the last one we're going to have a look at today is the pound USD. So the pound it's been an interesting one because it's been definitely short. I mean, obviously, we've been very, very short for very good, long, extended periods of time, but it's effectively done it under duress, okay? And it's effectively touched the 20 moving average nearly every single candle on the way down, which is rare. So these kind of trades don't excite me a lot because it's a market that tells me that it's a market that's not selling down with any conviction. And although it is actually finishing lower every single time, it is still doing it under duress, if you like, because it is trying to push higher on every single candle. So there's a war every single time this opens up a new day. Now, The level that it's at is a very interesting level, and you need to go out a long, long way to find out why. But it is actually touching the 200 moving average on a weekly, which is actually a very big deal. Okay, so you can see there the 200 moving average is right. It's already touched it and it's just bounced off a little bit. But you've got to draw a horizontal line to really appreciate that this level is extraordinarily strong. Now, remember, this is a weekly chart, a no-nonsense chart. Okay, and you can see here that we had very, very strong resistance right through these levels all the way back to 2018, and we had support there back in 2018 as well. You know, right through here in 2019, we had it again here in 2020, and again here at late last year, and now we're at this level. Okay, so it's a very, very important zone, and it's going to be no surprise to see it find support at this level. Now, we know that it's basically been coming, yes, we know it's been coming down very, very steadily and it hasn't had a pullback in quite some time. But again, you know, I go to it and I say it's coming down under duress. It's not selling off very, very harshly, very, very quickly. It's doing it in a very controlled manner, and there's a lot of pushback on every single attempt to go lower. And now that it's found a very, very strong base, I think that base will probably need to be respected. I'm not going to go long on this, even though this is a very, very strong level. I wouldn't be considering going along on it until we get a lightning bolt on a daily or a 4 hour at the very, very least, and a daily break above this 20 moving average. Extraordinarily important to get a break above the 20 moving average on a daily chart. That's the only way I'm going to take this long. But I think that if we get that, we're going to see some good movement up, and to the very, very least, we're going to see, you know, a push up to around that 133.50 area. So good trading, I think, but I would be very, very mindful that if you are shorting this or continuing to short it, it is at a very, very strong zone now, and just be very, very wary of that. And if we are indeed going to go long, don't just long automatically because of the support. Wait for it to get a daily break above the 20 moving average, and then I think we've got some good movement up. We've got a good range, and we can see it may not be the big catalyst that's going to turn it around and take it back to the 140s, but what we can definitely see is some good movement up and potentially test the 133.50 and even higher again at that point, and maybe get it back into the 136s, which is, we know, a very, very strong and important zone for it. All right, so I hope everyone's had a great week's trading. I think we've had some really good opportunities, and if you were following the analysis from last week, I think you would have done really well this week. So hopefully you were able to take part of that. Have a great weekend. I look forward to seeing you all next week.